Welcome to the Revenue Room podcast. This is where we sit down with CEOs and revenue critical C-suite leaders who are building the future of media, events, and data-driven information businesses. If you're running a growth engine in this industry, you're in the right place. Today's guest brings a rare blend of big tech operating experience and entrepreneurial firepower. Marilu Paez spent 17 years in senior leadership roles across major technology companies, ultimately serving as managing director of Intuit in Mexico. Then she made a bold move. She left the corporate track, relocated from Mexico to Miami, and jumped headfirst into the events ecosystem as a founder and investor. In this conversation, we dig into the early stage capital gap facing event entrepreneurs. We look at why operational know-how often matters just as much as the check. And we unpack the signals her team watches for when evaluating whether an events business is truly investment ready. Marilu is the managing director and co-founder of Events Venture Group, or EVG as we like to say, a nonprofit consortium built to connect event founders with experienced operators and strategic capital. EVG brings together 35 seasoned industry veterans and has already reviewed more than 130 ventures in just 18 months. They've made 4 strategic investments so far: Quantum World Congress, Deep Tech Momentum, Explor, and Stablecon. Their board includes leaders from Health, Connective Holdings, TED, Metacomet, and Vesuvio Ventures. In other words, people who have actually built and scaled category-defining event brands. Marilu, great to have you. Let's start getting right into it.
Hey there, thank you for the introduction. Thank you for having me, and hello to your audience.
Oh, absolutely. So Marilu and I'm actually a member of EVG. Marilu and I met up in Miami one Saturday a couple months ago on my way back from Madrid, and we had just a fabulous conversation about the industry. And I was like, Marilu, you have to come on to the Revenue Room podcast as a guest. We'll have a lot of fun. So
thanks for the invitation.
All right. Well, let's start with your background, because one of the things I really loved hearing about when we spoke over that brunch is that you really grew up in thinking as your career and like corporate America or corporate Mexico or corporate North America, however we want to call it. That was really where you felt comfortable. You were like super successful, and you spent 17 years there. And now here you are, an entrepreneur and a founder.
I mean, by way of background, I would say I started my career in a very hands-on way, in trainee programs, these rotational management programs, back in 2008, 2009, from healthcare to building materials, like all the different experience that helped me just learn fast, adapt fast, and become comfortable operating in different environments. And I went just picture this, Heather. I went from maximizing medical supplies in an ER during surgeries to literally exploiting mountains with dynamite for aggregate extraction, right? It's like
Wow.
yin to yang. And so the early diversity is what fed my versatile operating muscle. And that is part of my essence. And I deeply enjoy it. And then like when you're young, you're having like different mentors and different like voices. And I tested myself in a pure, I would say, marketing driven environment by working at British American Tobacco. I grew fast until a leadership team transition taught me that careers aren't linear, right? And timing is everything. And that's why I started my MBA, my master's, and heard a talk that I always remember from the CEO of Philips, the bulbs, in Holland. And that really struck me because it made me realize I was disengaged from the tobacco industry, right? And I was ready to start something more meaningful for me. And so around the time 2012, 2013, the startup waves hit Mexico. So imagine the Ubers of the world, just entering the market. And I jumped as a head of SME, into the bank for entrepreneurs. And I learned one of the most valuable leadership lessons of my life, especially as you can imagine in a male-oriented society like Mexico, right? The so-called not invested here, right? So influencing people who don't work for you, who aren't hired by you, but whose actual steps and success affects yours, right? So that was another like very important learning for me. And I would say that role connected me back to one of my mentors, and that's something that I've always had around me, like being surrounded by mentors. And this opened the door to Afluenta, which is kind of a lending club where I had a front row seat with regulators, policymakers, and Mexico Banking Commission. And I led an entire regulatory authorization process surrounded by the best teams like White Case, Deloitte, etc., to secure the official fintech license. And that was a masterclass, I would say, mostly in PR and navigating complexity. And that experience propelled me to become the country head for Intuit Mexico, where I grew enormously as a leader. Started the role right when the pandemic hit, like literally March 20, fully remote, formed an incredible cross-functional team. And here's where the biggest lesson happened, right? The shift from a strong manager to a true executive, right? Delegating at scale, thinking in systems, no longer in tasks, and understanding that what brought me here won't get me there, especially in a matrix organization. So, as you said, those 70 years, that sounds like a lot now that you mention it, were my boot camp in adaptability and new beginnings, as you can see, like across industry cultures and leadership style. People, I would say, is the most important like driver in all my experiences.
Wow, that's exciting. Really very focused professional. So, which leads me to my next question, which is, you've been recognized as an exceptional woman in leadership and named one of Mexico's 30 in their 30s, or top 30s in their 30s. What drove you to leave that established corporate career and make the bold move to Miami to pursue entrepreneurship?
Yeah, well, it was mostly forced, I would say. At Intuit, I experienced something very few leaders face. It's basically a global strategic shift. When Intuit acquired Mailchimp during the pandemic, they made this decision to redirect all international efforts toward the acquisition, and they exit emerging markets entirely during the tech winter in January 2023. So closing operations in Mexico was the hardest moment of my career, and one of the most transformative. Sometimes gifts come in ugly packages, and that moment like literally became the bridge. It was a life threshold for me, like kind of a reset. And I decided I was ready to stop operating inside someone else's vision and start building my own vision. So around, I would say, that time, I was getting interesting partnership opportunities, more than going back to the corporate world, which called my attention. One of them came from who is now my business partner here in Miami, who encouraged me to just step into the entrepreneurship and launch a business management consultant practice here. And the funny thing, now that I'm telling you the story, it makes me realize how crucial was a Tony Robbins event that happened in West Palm Beach, that's called Business Mastery, which gave me clarity to form Duet Synergy, my consultancy, and just grounded in the idea that a better future can only be achieved through collaboration and the collective power of experts, similar to what you're doing with RevLab. So I met the leap, new country, and became an entrepreneur in my late 30s. It was definitely a bold transition and a path that ultimately led to EBG now.
I mean, it's really impressive. Takes a lot of courage, not just going into entrepreneurship, but as I say, well, you have a partner, but you're still very much a solo operator, solo founder in a way. Leaving your home country to move to Miami, to the United States and Miami, and establishing yourself here. And that's bravo. And I loved what you said. Sometimes gifts come in ugly packages.
That's exactly what happened. That's the best way to put it. Right now, it sounds like an awesome, experience, but it was rocky and hard, right? While I was living it. When you see it in hindsight, it changes, right?
Absolutely.
During the time,
it's what gives you grit. It's also what helps you mature. I mean, it's the hardest experience in my life that, I look back, I go, God, what a baby I was before that. like a 40-year-old baby. But yeah. All right. So next up, I'd love to talk to you about because you've got a lot of confidence, and I love that. And when I speak to you and about like what you've got conviction and confidence, and you describe yourself as a bold strategist who thrives in dynamic environments. So now you're leading, you're working with early stage founders. So you're not only in a way like evaluating how would they be as an investment for the consortium, for EBG members, but Is there a part of you, based on your experience, you understand the growth strategy that wants to like help them, like be better leaders, be better founders?
I think in both worlds, I anchor what really drives me is the people, right? So it doesn't matter really the industry and even the idea. It's just like understanding people's like motivation, customer psychology, and just behavioral patterns. But the complexity comes different, right? In an enterprise, the complexity comes from scale and governance, right? And mobilizing big teams. And in early stage startup, I would say complexity comes from scarcity. And you have limited time, limited capital, small teams, right? And need to prove traction quickly, right? So I guess the biggest shift, particularly for me, was moving from clear direction and stability to the entrepreneurial realm that's about consistency and adaptability. The biggest realization was velocity. I always thought like, well, in corporations, I assumed that corporations work in elephant pace, right? But the reality that has been one of the biggest shock and that I see in other entrepreneurs is that small business positioning and validations results take longer, and it's a long cycle, and I expected, I guess, more velocity and acceleration, and it was total opposite. I needed to be more patient, and that's exactly what I see in the hustlers, right? In all these entrepreneurs that are in any industry, but particularly I like to call the events the industry of industry, because I didn't even consider events as an industry myself, because all events has their own industry, but you never encapsulate them all into an industry. But yeah, I would say that at this point, when you compare the corporate world versus the entrepreneurial world, what I miss the most would be having a team, a team to develop.
Yeah.
That was something valuable.
Well, so you hit on a couple of really important points, and I think having experienced this myself, having worked for large companies and then going off on my own, is that shift in mindset of I can't just hire my way to a solution, or I can't, purchase technology and fix my way. Like you just don't have the capital to do that. You don't. So it's really
Yeah.
figuring out how to do the bootstrapping and the hustle and getting out of that mindset, because sometimes that mindset stops you with we can't do that because we don't have XYZ. So that's I totally agree with that. And I also think on the flip side, the freedom to pivot fast without having to ask a gazillion people for permission is a big
Autonomy,
plus.
yeah, it's
Yeah.
priceless, like a
Yeah.
blank canvas. And yeah, you have to be working all the time in the business that you're running now and the business that you want to become, right? And that's the hardest part, splitting your time.
Yep. Well, you brought up something interesting that actually is a great segue to my next question, which is you didn't consider the events industry an industry sector because, and many people don't. When I say I like focus on media and events, like events, I'm like,
Mhm.
it's huge. And events play a massive role, not just as a multi-billion-dollar industry sector worldwide, but and the economic impact, but they shape industries. They make companies, like So, for listeners who may not be familiar with the events industry investment landscape, can you explain what Events Venture Group is and how it differs from traditional venture capital firms or private equity?
Sure. So Events Venture Group, or EVG as we call it, is basically the first of its kind angel syndicate. Dedicated to helping early stage event entrepreneurs to turn their ideas into sustainable event businesses. So our mission is to shape the next generation of event entrepreneurs. Think of us as a marketplace with three pillars. So we have the founders, we have the members who are the investors, and we have the sponsors, right? So as you very well mentioned at the beginning, we're a non-for-profit, which means we operate via fees from the members and the sponsors. And our mission is connecting members with founder or deals, projects, right? So how do we do it? And I think this is where the interesting part is. It's a highly collaborative process. So we don't take full control of the event businesses. We don't acquire and run it. We don't have the scale to do that. What we do is we invest in the business. So don't require massive equity, normally around 10% to 20%. And all investments are made individually by members, right? EVG is not the one who invests. EVG, I'm basically acting as the syndicate lead, and just like for clarification. So the problem we're tackling with EVG is that many, as you were saying at the beginning, right? Many conferences, summits, and gatherings starts with passion, but they often lack the operational know-how and the strategic guidance they need to grow sustainably. And EVG fills that gap, right? So in simple terms, EVG is a founder-first support system, a brain trust backing both founders, innovating live experiences to scale sustainably, but not just to help them, but also we like to see that it strengthens the whole entire events ecosystem. Right? When you put it from the investor lens, that you might have a lot of people in your audience, the way we have structured EVG, and I was explaining this to you over coffee, but it's a hybrid investment, because I like to say that we have a piece of VC and a piece of private equity. So for venture capital side, EVG is just we invest and we let founders operate, so they continue their vision without interference, right? Because that's what you are investing in them, right? And from the private equity side is that we're very intentional and selective. So we're not chasing unicorns as in VC, right? So we aim for sustainable, profitable events with real exit plans. So that's from the investor lenses, but from the entrepreneurs space. So we provide a mix of mentorship, investment community, and hands-on founders that can launch and scale successful events without feeling overwhelmed or alone, right? That's the main pain point that we're touching. And we don't just provide capital, we provide tested playbooks, right? Where founders don't get generic, like there's a mold, here you go. They get access to operators who have built, scaled, failed, and exited major events, right? That's the EVG difference, I would say.
So you bring up a lot of really incredible points there, but one of the big ones that I've noticed as a member of EVG is you have 35 seasoned event professionals as part of this collective group. Not everyone invests in every investment, and we'll talk about the investment shortly, but all the members seem to want very much, whether they invest or not, to help the founders of these investments to actually improve and accelerate how they're creating value and how they're scaling and building their business. So is that an accurate assessment?
It's real passion, 100%. It's like, I call it the give back effect, and that's how this started. So building this group, Heather, for me has been one of the most fascinating experiences I've ever lived. The camaraderie, the professionalism, there's real passion behind events that motivates each and every one of the members to build what EVG is today. It takes a village, right? Our members are a creative group of seasoned founders. Everyone has 20 plus years of top flight event operators or investors who've been behind some of the industry's biggest companies or success stories. I don't want to start calling names, right? Because we won't finish, but everybody has a unique story. But one thing that really calls my attention, and I would love to hear your opinion on this, is like, I see events driven but not owned by women, and that's a trend that I would love to see evolve in this industry, as it happened in tech, right? At the beginning it was all male too, but I would say we need more more Monique Roof bells, in EVG. I definitely welcome more women accredited investors to consider joining EVG for the passion of giving back. This is a spirit that we were calling at the beginning. And one other thing that this collective of event veterans have in common is how it started, right? So I'm this is exactly how I met Marco Ghiberti, and I told you about this over coffee. I play paddle, I love paddle, and through a paddle connection, Marco said to me, that's how I met Marco, and he said, like, hey Marilu, we're a bunch of event veterans who's willing to give back to the new generation. And I say, like, oh, let's translate that into a mission, like shaping the next generation of event entrepreneurs and start this. And that's how it started. And instead of just mentoring the next generation, we're co-investing in them. Right.
Mm-hmm.
And I think the entire process is member driven. These members evaluate the deals from their life experiences. So there's not a group of analysts running spreadsheets, right? We're a collective world-class event founders that has experience, operated, sold, and scaled. And every project is evaluated by people who have been in the arena, not just people who model excels in the arena, right?
Yeah, and what people don't understand about events is the battle scars you get through running events, and everyone has a ton because that is the nature of events. I always tell my team, everything you think will go wrong will. So get over that and fix it before it happens, because then there's the stuff you don't know that's going to go wrong that will, and you need to have your wits about you during those, the 3 days of the event. But being able to help, these next generation founders avoid some of the avoidable, but just inevitable mistakes.
Operational mistakes, yeah.
Yeah.
And I think to your point, like what some people ask me, like, hey, but what do I get when you invest, when they invest in me? Say like, hey, see it this way: we open doors, right, to sponsors, to venues, to media, to talent, to partners. We accelerate execution. We can, like make your year 2 look like year 4 in terms of results. We challenge your assumptions, which is something that you definitely want everywhere, right? Not only for if you're building an event, you want someone who is a sounding board. And we, most importantly, I would say, we help shape the business model. And make it like real and up to date to the whatever situation you're going in the category you're building an event.
Excellent. Well, let's talk a quick question that I'd like you to answer before we talk about the 4 investments. And that is, what is, for anyone listening who happens to be an event founder, what are the criteria that is like the door opens to be considered?
Okay. Our process, I would say, is super simple. It's basically split into 3: screening, pitching, and syndication. We're looking for events that are from 0, like pre-revenue concepts, all the way to year 3, and they're already making 300,000 in annual revenue. That would be initially the simple criteria. I can tell you a lot about what we see in the events, but or we can tackle that when we talk about the syndications.
Okay, so basically, it could be pre-revenue up to 300,000. What if it's $1 million?
Even better. It just happened to be something like that. Yeah. But it's like the kind of the average that we have seen in the market is that anyone who is in year 1, year 2, they're starting to have at least 200 to 300,000 in revenue.
That's true.
That's kind of the average.
All right. So the first investment that you came across that was selected for the investment was Quantum World Congress. What made this event stand out?
I would say Quantum was actually one of our a syndication that we closed. It was the first one 1 year ago, and it stood out immediately among the 60 to 70 ventures we reviewed back in the time. I would say the first thing that stand out was the founders, Stuart and George. Each bring more than 20 years of consulting experience in the quantum industry, right? So they weren't chasing a trend. They had deep expertise, deep networks, and a real understanding on the problem in the space. And that's always the first check mark for us, team quality. The second one is the market and the competitive landscape. We look at, is the category crowded? Who are the incumbents? What's the clear value proposition of this event? And quantum, we all know as a category is still emerging, and there was no established flagship convening own practitioners for practitioners. And QWC leveraged the first mover advantage, right, in a nascent space with a high intellectual demand but fragmented communities. And I think another important I would say, thing that stood out and that we actually established for our later syndications was the champion model. And let me just give you some like explanation around this. In this particular case with Quantum, Doug Emsley was the one who led the due diligence of the event. And our entire process, as I said before, is member driven. But when a deal shows potential, we assign a champion to it who leads it all the way from pitch to syndication. And I think that gives the project motion and certainty, not only for for the founders, but also for the members, right? For the potential investors. And finally, this was very particular to Quantum. We co-invested along CTA, the Consumer Technology Association, the owners of CES, which created additional confidence and validation, right? And this part is what makes EVG unique, because most of our opportunities originate within our memberships. Members don't just suggest deals. They often invest personally and use EVG as a brain trust to validate strategy.
Got it.
Yes.
That's
more collective.
Who brought the CTA in?
CTA, they brought it in, but Marco Ghiberti was the one who brought Quantum.
Okay, got it.
Attention.
So the second investment, which I love this one, Deep Tech Momentum.
Big fan.
So that was a much larger investment, no?
Yeah, that was a much larger investment. And I would say for this one, and not to be repetitive and trying to use a different example, I personally was super attracted to, and I think most of the members were attracted to Martin and Isabel, who are a force of nature, like a true dynamic duo. Their consulting backgrounds give them clarity of thinking and operational discipline. And what we love about them is they don't wait for resources, right? They pull the right advisors when needed, and they never lose sight of momentum. That is something that is very, again, people driven, right? Like, so the founder is crucial. And there's, a strategic layer that resonated with us, particularly for the DTM, was that it was a European initiative, right? So this started in Berlin, and EVG has a global membership. So many of our members have launched events in one market and then successfully geo-cloned or replicate them into other markets. Right? So expanding proven formats across geography is something we actively encourage in EVG, as we have the expertise to help founders with this, right? So we saw DTM not as a single city event, but as an expandable format that could move through hubs like Munich, Amsterdam, London, US, of course, and even like Middle East, right? So for us, back in DTM, fits perfectly with that nature, and it also foster kind of connections between founder and capital to accelerate innovation adoption, right? So just they are building a platform, a technology platform behind the event, which is an interesting intersection for us.
No, I think the thing I really loved about it wasn't just events. It was community, it was data. There's a lot going on with that business, and it's taking the concept of an in-person experience and creating not only a 365 experience, but also the data that's being generated out of it could actually probably, become its own revenue stream. So I think it was a great one.
Yeah, it was definitely a very compelling thesis for EVG.
All right. And then we have our third investment, which is Explor, which actually isn't really a startup. It's also I want to call it event tech / data, because the platform is there, but what's the value is the data that is spun out of what the platform can do. Is this representing a shift, or was this always part of the plan to look at event tech / data solutions?
We tried event tech, and it's something that I would say doesn't really hit the mark for the vast majority of our members. So if you will call out the investment criteria that you were asking at the beginning, we would say our target is pure events or events plus data and media. Right. And that's where Explor comes in. And what was compelling about Explor and initially was Mark Brewster as a founder. I know I sound repetitive, but it's really important, right? Is the transformation he's led over the decade in this space. So he's not only bringing a tool, but he's reinventing how the industry measures itself. So from our perspective, evaluating event tech requires different lenses. So it's more about solving the real pain experience across events. Does it scale globally? Does it integrate to multiple event platforms or industry? And does the founder understand both tech and event operating psychology? And with Mark, it was a yes for it all, right? Because
Yeah.
he also is the founder of ELX. So Explore goes far beyond education and thought leadership because it provides measurable ROI to stakeholders, from sponsors to exhibitors to organizers, right? It becomes a strategic like layer in the industry backbone. And that's what we see on top of Mark's reputation in the industry, who is, by the way, one of the biggest EVG or greatest advocates of EVG. So we
Yeah.
definitely love Mark. But yeah, Explore, it strengthens our industry intelligence infrastructure, and that's what's just critical.
No, Mark is
Beyond
a
events.
fabulous CEO and founder, and just an overall awesome guy. So I was very happy to see that one.
Yeah.
And then your latest one, StableCon. So talk about this one. I know you're very excited about it, but tell us more about the investment. What attracted the members? And it can be the same as what the last three. But what excites you most about StableCon?
For me, stablecoin fits beautifully into EVG's portfolio because it sits in the intersection of two things we believe deeply in. Basically, is emerging financial rails, right, and the power of live convening. Right. So Nick, again, back to the founder, is brilliant, but at the same time, is super humble founder, who's galvanizing a community around a new financial ecosystem, who he portrays and lives as an opinion leader. Right. And so beyond the leadership qualities that we discussed earlier, what stood out was how strategic he was in building the event with an exit plan in mind. I think that was crucial. And backing it with tangible traction, right? Like real sponsors, confirmed speakers, committed partners, and profit, of course, right?
Mm-hmm.
And I've seen many great events with vision, but no measurable momentum. And that's the difference between a concept and an investable asset, right? So if we think about the signals from a macro perspective, what we see in a stablecoin adoption is accelerating, right? As institutions move toward blockchain-based settlement rails, the regulatory conversation is also heating up, which means the category is about to get professionalized. The developers, the exchanges, the funds, the brokers, the policymakers, everybody are converging, and they need a neutral ground to collaborate. And so these elements of which is like situational to the category, right? A stablecoin sits right in the gap where the new financial infrastructure meets credibility, building a multi-stakeholder alignment. So EVG's thesis that events are not just gathering, it's platforms for industry acceleration. And that's
Mm-hmm.
exactly what stablecoin is. It's positioned to become the flagship convening of this emerging asset class. And Nick is building it as an enduring IP with real enterprise value. That's exactly the archetype of founder and project that EVG wants to see.
So
Wants to invest.
these are really four very interesting investments, each interesting in their own, but also it's starting to really become clear what the EVG membership is looking for in terms of the right investments to make. So thank you for sharing that.
Exactly.
So with that, it says you've reviewed over 130 ventures and you've had almost 13 or more than 13 founder pitches in just over a year. What are the biggest mistakes you see event entrepreneurs making when applying for investment and pitching?
Oof, the biggest mistakes. Let me see where to start with that could be super valuable for the whole audience. One of the biggest mistakes founders make is trying to do it alone. I would say around 80% of event businesses are bootstrapped and avoid sharing equity because they want to keep the 100% ownership, right? But often they end up with 100% of something that never really takes off. And so the founders who build truly strong, scalable events understand that collaboration is acceleration, right? And bringing in advisors and operators with real skin in the game, that definitely gives them progress and maturity. And here's the upside: when an event is structured well from day one, with monetization, with partnerships, with community retention, which is something that you do really well in your ventures, Heather, it becomes a no dilution growth engine, right? So it funds itself through revenue, not endless capital rounds like a tech startup, right? So that's heaven for founders, but that's also heaven for investors, right? Because there's no Series A, no dilution, nothing. So it's about losing a piece of your is you're not losing a piece of your vision. That's what I want to just clarify with the with the audience, because there's kind of a myth behind this. It's about some growing something bigger than you could alone, and lifting your entire ecosystem in the process. It's not only you the one who's winning. It's like everybody, like your team, your advisors, your vendors, everybody grows with you, right? So yeah, I would say like not doing it alone is one of the biggest recommendation, or what not to do, right? And I see it daily. That's a big
you need a sign behind you. I love it. Collaboration is acceleration. And it's so true. And it takes a mature person who's failed a few times to really truly understand how important that is, because our human nature is not only to protect the investment, but this whole like competitive, like psychoticness where like, oh my God, they might be competing with me or steal. Go ahead, try it. Like, or do we play together and do we win together? So
and it's just like, I mean, we have like this saying that there are some sayings in Mexican that there are no replication, but you can be replication to or translation to English, but you can be the owner of this, of the little owner of this, right? So that's exactly what this, like, my first message is, and it's sometimes it's really hard with entrepreneurs to really get it, right? Like, hey, no, this is mine and I don't want to give out anything. And yes, you can live maybe with that event for 3 years, 4 years, right? But then what? And the timing in events is super crucial.
Yeah, for sure. Oops, sorry, go ahead.
No, I just, if I were to say another, because I was debating between two common mistake, I would say the other one would be the paralysis from all industry horror stories. I don't know what happened in this industry, but there are a lot of entrepreneurs that still fear that they pitch the idea and someone will take it and run with it.
Yeah.
Guys, EVG is the complete opposite. These people who you're pitching to are seasoned retired executives or exited founders, or people like you who are already doing what you're doing, right? They don't need to operate. They already done that, right? So what they really want is to help you shape it, right? So we'll build where ecosystem, like an ecosystem that entrepreneurs drive their REITs to maintain their ownership. We don't need your information. We tackled this front via Notion portals. So it's like we kind of like tackled that one but it was so common and it really called my attention in this industry. I don't know what happened, but maybe it happened before, but because they pitch to big companies that they have the whole resources to make it happen. Maybe because of that.
So one is, again, I think it goes back to my point about the maturity of the mindset, because that's just in general, whether it's events or elsewhere, that's an image. You shouldn't be pitching for investment if you think someone's going to steal your idea. I mean, that's number one. Number two, unique to events is it's much harder to go steal someone's idea. I mean, you could do the best operational execution for an event, infrastructure and like all of the AV and all that stuff. But when it comes to the content, the trust, the network that you're building, like that's like an owned asset. It's unless someone was pitching to me, someone had the exact same idea of, what we're doing at Revenue Room CXO with RevLab. They're targeting media events and data as a service industries, or going at the CEO and C-suite. And FYI, they know everything about data-driven revenue acceleration, and FYI have another trademark on something very similar. Like, they'd have to replicate a whole bunch of stuff, and like for them, like, to steal from me. And so I think it's they don't get that, how important that part is.
Yeah, and I think it connect. I will add a fourth one, a fourth one to the ones that you just called, but it's the passion behind it. You need event entrepreneurs are warriors. They need like the why behind the project is huge, right? And that's another common mistake of events that we receive, that are just, they lack research, they lack storytelling, but most importantly, they lack to tell the passion. Why are you doing this and why today? And why
Yeah.
in this market, why like this, what's your positioning? So that's another like big mistake that we see, and we say like, there's not there they don't have enough conviction to keep going after all the challenges that they're going to face, right?
All right. Two
That's a big one.
quick questions before I move into rapid fire. Just for the listeners, on terms of if you were like, how do I become a member? There is certain criteria. So, Marilu, you want to share what membership looks like?
Yeah, particularly for member to become an investor in EVG, you need to be an accredited investor, and we're the only requisite, or what we ask is not to be a full-time employee from a private equity or trade show company that's public,
Right.
right?
Right.
So that's the only thing. Other than that, we welcome also people from other industries, right, with complementary backgrounds like marketing, finance, you name it, that are important for the expertise that these people, the founders, needs to grow a business.
Excellent. Excellent. All right. So just what's your, this is not really a quick question, but we're running out of time. And I do want to ask this. What's your vision for EVG over the next, 2, 3, 5 years?
I would say, looking ahead, the bigger vision for EVG is to become the magnet and capital backbone for emerging event founders. So the place where they get not just funding, but wisdom, guidance, and acceleration.
Yep.
Ultimately, EVG is founders first. And so we exist to support people building event IP, to live the entire ecosystem, and to ensure more viable, sustainable events enter the market. So with our standard membership and sponsors, we we're present at the major industry gatherings. So we're already becoming closer to all those event organizers, wherever you are, right? So particularly for 2026, Heather, we're launching our EVG Knowledge Base Center, which is basically a centralized intelligence hub and you will find there consistent office hours, access to operator, master classes from industry veterans, and proprietary content created via our sponsors. So I believe the future is not about volume, it's about depth and building community with useful purpose. I'm a big believer of quality over quantity. I think 4 to 5 thoughtful syndications every year is healthy and smart, and it allows us to stay close to the portfolio companies and robust our due diligence. That would be where I foresee this.
All right. Well, I'm going to run into now our always here part. We like to call it rapid fire. So what's the number one red flag about a founder that gets your spidey sense going?
That when they apply, you mean, or when I met them?
When you meet them.
When I meet them, I will stick to lack of passion.
Okay. What's your favorite way to unplug?
Talking to my sister.
And what's the book you're reading right now? What's on your nightstand?
On my nightstand is a book that's been there for the last 2 months. Is The Stoic Capitalism. It's dense, so I haven't finished it. But the one that I'm digesting like crazy is The Next Conversation with Jefferson something.
All right. Let's look that up. The Next Conversation. All right. Well, Marilu, thank you so much for joining us today. Before we close, a reminder that the conversation doesn't end here. It continues inside Revenue Room CXO, the only network where CEOs and their revenue critical teams turn AI disruption into growth strategy. And if you want to experience that thinking in the live format, join us at Revved Up 2026, March 23rd through the 24th at the Vinoy in St. Pete, Florida, where the future of data, AI, and revenue leadership takes main stage. I'm also going to make sure to share Marilu's contact information via her LinkedIn profile, as well as the link to the EVG website in our show notes. So again, show notes, you can access Revved Up, Revenue Room CXO, how to connect with Marilu, and how to learn more about EVG. And with that, we'll see you next time. Thanks for joining.
Thank you, Heather.